Welcome everybody. Today I want to take a look at the dream of having income paid every month, even if you're on the beach in Mexico sipping pina coladas and topping up your tan. A lot of people see this as a pipe dream, never to be reached, but in this video I hope to show you how it may be a little closer than you think. So I've got 3 companies today in 3 different industries that all pay monthly dividends to help you achieve this dream. Now if you've watched any of my previous videos you're probably already familiar with dividends, but if you're not, dividends are just sums of money that companies pay to their shareholders, and this usually comes out of a proportion of their profit, but sometimes companies do have to pay these out of reserves, but that's not a business model that's going to last too long. So the first stock I want to take a look at is Pembina. Pembina is a leading pipeline operator and provider of midstream energy infrastructure services, which include things like oil and natural gas pipelines, storage tanks and terminals to facilitate the shipment of energy products by land or sea, and wholesale marketing of energy products to downstream businesses like gas stations. It's based in Canada, and the level of activity in the energy industry there has given Pembina plenty of opportunities to work on in recent years. Being an energy company, these are generally seen as safe stocks, but that doesn't mean it is completely unfazed by the weak oil prices seen in the last few years, when crude oil fell as low as $30 per barrel before it rebounded. Things are looking up for Pembina though, as they work hard to get liquefied natural gas from the gas fields on the west coast of the United States and Canada. They are also well positioned to benefit from the rising energy prices, and that's why I think there is definitely potential for the dividend to grow in the future, despite it already being a healthy 4.6% yield. One thing that does concern me though is their payout ratio, which I think might be a little too high at 98.25%, and this could possibly indicate a dividend which could be cut. But saying that, they have increased their dividend amount every year since 2014, so the management of the company must be confident enough with their balance sheet to continue paying these dividends and continue rising these dividends. And the next company I want to take a look at is Stagg Industrial, which is STAG on the New York Stock Exchange. Now this is a company that's been on my watch list for some time. Stagg Industrial is a small cap REIT, a real estate investment trust, and Stagg stands for Single Tenant Acquisition Group. And what this means is that Stagg acquires single tenant properties in the industrial and light manufacturing space. So things like a warehouse is typical for Stagg, or even a small factory, those sorts of things. And they first went public in 2011, and since then they've expanded their portfolio 369% into 37 states. In the same period of that time, the dividend has also grown 35%, which is not bad for a small industrial REIT at all. The low maintenance costs on their properties in comparison to something like a hotel or a mall or even an office building makes them quite attractive, and their respectable 5% dividend yield is definitely an attractive proposition for investors too. And at the rate which Stagg is growing their portfolio, I would reinvest the dividends as long as you can. So when you actually need them, you're going to have a much bigger position in Stagg, which means a larger monthly payment. Something I would consider when purchasing Stagg is be wary of share dilution, as a lot of their portfolio growth has been financed by the selling of new shares, and since 2011 when they went public, the number of shares has quadrupled. I don't see this as a huge problem, as this is fairly typical for REITs, just something I want to make sure you guys were aware of. And overall, Stagg offers a generous yield and has a strong financial position, a well-diversified portfolio, and significant opportunities to continue its growth. So I do think it is a great REIT. And the last stock I want to talk about with you is Main Street Capital, and this is a business development company, or BCD for short. What this means is that they provide financial services and mainly focus on smaller to middle market companies. This means that they provide financing in both terms of debt and equity for up and coming businesses, and this allows them to reap the rewards of an equity investment in its partners when they do well. This does mean they're exposed to a slightly higher risk than the other 2 companies here. But as with most things, more risk can mean more reward, and with Main Street Capital this comes in the form of a fantastic 6% dividend yield. And this dividend is also steady, boasting 8 years of consecutive growth. And not only does Main Street Capital pay 12 dividends per year, they regularly pay a special dividend about once a year, sometimes twice, which does provide a nice boost to income for investors. And again, this is a monthly paying company in what I would categorize as a more risky investment than the other 2, as they deal almost exclusively in young companies. But this does mean that when they invest in the company that does well, they can make a fantastic return from it. They also pay out around 90% of their earnings to shareholders as dividends, and while this is high, I don't think it is so high that it will be on the chopping block to be cut soon. And management are also comfortable and confident, as this is demonstrated by the special dividends that they pay, that they don't have to. So the conclusion here is that these are 3 stocks I would consider if you want to earn monthly income from your investments. And I picked 3 different industries for these stocks just to give a more diversified portfolio than all REITs. Not saying there's anything wrong with REITs, provided that you've done your due diligence. Saying that, I wouldn't purchase these stocks expecting large growth in the share price, as I think they are fairly priced currently, and you could wait if you feel like trying to pick up a better deal. But for monthly completely passive income, I think they're great picks, especially with the limited number of companies that actually pay monthly dividends. So did any of these stocks take your fancy to earn some monthly income? Let me know in the comments down below, and also like the video if you learned anything. Make sure you subscribe if you're interested in learning more about investing and passive income. It really helps me out a lot. Thank you for watching, and I hope to see you in the next one.